Hello everyone and welcome to the Weekly Report. For Randall Riley, I'm Joshua Miller. We have a lot to cover today, so let's get right to it. This week in job board searches and clicks. Truck driver searches were up across the board. We saw increases of 6% week over week, 13% month over month, and 38% year over year. Clicks on driver postings were down 11% week over week, but up 1% month over month and 26% year over year. Click counts have continued to trend downward after a spike which coincided with the enhanced federal employment benefits coming to an end. Now this mirrors previous studies that showed a brief activity spike followed by a leveling off in the states that announced they were ending those enhanced benefits early. On the other hand, after closely following 2020's click trends through August, clicks have been up around 25% each week since the unemployment benefits came to an end. This week in freight. Load postings were up 5% week over week, marking the highest volume levels since the end of June. With that, dry van postings increased by 6% week over week, while flatbed rose by 7% and refrigerated remained unchanged. Overall, we're seeing the spot volume continue to outpace the seasonal expectations as the supply chain continues to deal with several major disruptions. Truck availability declined slightly by 1% week over week as the load-to-truck ratio hit its highest level since the end of June. I can also tell you that the load-to-truck ratios were higher week over week in all major segments, but the availability by segment is again unavailable at this time. Sorry. Spot rates dipped by 1 cent per mile week over week, with flatbed rates remaining unchanged, while both dry van and refrigerated rates dropped. Dry van was down 3 cents and refrigerated was down by 5 cents per mile week over week. Now, the story of the week. Fleets continue to struggle as their growth stagnates and owner-operators surge. For the first time since the ATBS has been tracking fleet and average independent owner-operator salaries, the pay levels have now surpassed $70,000. The increase in net income of more than $70,000 is an average figure across all categories of drivers and equates to an increase of more than $6,500 in 1 year. That's up 10%. Drivers' increased revenue per mile is up 4.5% from last year, with the overall rate up 7 cents per mile, coming in at $1.55 per mile. The ATBS's numbers are a result of the massive base of financial information compiled through their activities offering tax and various other financial services to owner-ops and fleets. The president and CEO, Todd Amen, says that this is now the best environment he's seen in over 30 years in the industry. And if you happen to be an owner-operator, you'd probably be inclined to agree with him. Comparing owner-operators and fleet drivers, the owner-ops currently have an advantage of more than $1 per mile compared to their counterparts. Not surprisingly, as more and more company drivers see this, many are making the jump and becoming owner-operators themselves. This means fleets are not only left with a smaller pool of company drivers, but those that they are left with want to drive less than what they have in the past. Compared to the first 6 months of 2020, now keep in mind this does include April and May, which were feeling the effects of the pandemic, the ATBS drivers are now running 1.5% fewer miles. From what data and anecdotal reports tell us, drivers are making so much money on a per mile basis that they've simply been able to say they're going to drive less. Since they have more coming in, they're willing to forego the extra wages for more leisure time. But it's not all sunshine and rainbows, Amen cautions. The good times won't last forever. And he asked the question, when will the owner-operators move back to fleets? As long as independent drivers can make $50,000 more running loads on an elevated spot market, they will. But when that market begins to cool and the rates come back down to earth, many drivers may find themselves looking to rejoin a fleet. At that point, however, those fleets will be faced with the same downturn and probably won't need the drivers. Amen notes, drivers need to understand that to make good money over the long term, maybe the fleet is the place to be. And that does it for the Weekly Report. Come back and see us next Wednesday morning as we take another look back to help you move forward. Until then, have a great week, everybody. Hey guys, thanks for watching our video. If you liked it, don't forget to like, share, or subscribe. You can subscribe by clicking that little button right over there. And if you like the video, you can find even more content like it on our page or by clicking that playlist right there.